Hi, Wayne Voss here from ForexTweak.com. Thanks for joining me in Lesson 1, Breakout Trading. In this lesson, I'm going to go over some concepts of breakout trading. We'll talk about support and resistance, the initial stages of a breakout trade. I'll cover your limit orders. I'll talk about your stop losses and then trailing stops, and then eventually, we'll go ahead and go through the entire process of an actual breakout trade so that you understand it. And then in another lesson, I'll cover the actual price charts, and then hopefully, we'll go over the same concepts again through real price charts. And then I'll follow up with a video on some of my live trades. Okay, so let's go ahead and get started. So right now what you're seeing is a diagram of consolidation zone. These squiggly lines here in bold black are basically our price. So these lines represent price, and right now you see that price is in a consolidation zone here. It's hitting the top of support several times. The top of resistance several times, and it's hitting the bottom of support on several occasions. Okay, so basically, in a breakout trade, when you spot consolidation zones like this, you want to wait for price to break above or below the resistance or support levels respectively. So in this case, let's just say that we've waited a while, and we see price break above the point of resistance, okay? And then it reaches a price peak and it starts retracing. So at this stage, this is a good setup for a potential breakout trade. So what just occurred here is we could have had maybe a consolidation zone right before a news announcement perhaps, and then all of a sudden after the news announcement, price breaks above in favor of the base currency pair. So price breaks above resistance and then forms a new high. So typically what I like to do in setting up my breakout trade is I like to mark that new high. Okay, and I do that by drawing a line. So basically what I'm doing here is I'm marking a potential point of where I would enter a breakout trade. The next thing I do is I place a buy stop order slightly above this price, this new high. Okay, so I place a buy stop order around here, and then I simply wait for price to come my way. If price heads back up and retests this high and breaks above that, then my buy stop order gets triggered and I'm now in a trade. So let's go ahead and continue this example. So now price hits a support level and it attempts to go up and retest the previous high, but it doesn't. It comes back down, and then now it goes up and breaks above the previous high. So now our buy stop order that was placed here would have been triggered, and so our trigger point would be somewhere around this area here. Okay, so let's just say that that's our trigger entry point. Now I want to show you a pattern that frequently occurs right before a breakout, and this is something that you might want to note. You see this W on bullish breakouts. You'll see a lot of these W's. Okay, this is typically a good sign. If there's a W forming, there's a very high probability that the trade will continue higher if that W follows through and breaks out above the previous high. Okay, and on a bearish market, you'll see the opposite. You'll see an M that breaks below your previous low, and basically that's a good trigger for a breakout trade. So just a small tip there, because you see these W's and M's a lot. Okay, so continuing with this lesson, we've gone ahead and entered the trade here. So the next thing you want to do after you enter the trade is you go ahead and place your stop loss. Okay, now you can do this before or after the trade. I like to do it after my trade. Visually, I've been trading for so many years that I will look at the point of entry to the previous support levels, okay, and I will kind of eyeball my support level, and basically I can tell based on the distance between my potential entry point and where I want to place my stop if that is if I'm willing to take that risk. Okay, now if you like to actually physically look at the numbers before you enter the trade, you can do that as well. So what you do is, if this is your new high and you're looking to potentially enter this trade, then what a lot of traders do is, before they even risk entering the trade, they will mark their stop loss, and then they'll measure the distance between the stop loss and the entry level and see how many pips they would potentially lose if the trade goes against them. If that amount is too high, then you can have the option of skipping this trade and looking for a better one. Okay, some people like more wiggle room, so they can also look at the support level of the last consolidation area prior to your breakout entry point. Okay, so it just depends on what kind of trader you are, what kind of risk you're willing to take on the trade. Typically, I like to go for the swing low or the support levels right before my breakout point. So in this case, let's just say I put my stop loss here for just for an example's sake, and then we continue with the trade. So now the trade's coming back down. Okay, so basically we're waiting to see if this trade continues, and so to do that, what I do is, do you see this next new high that it created before the small retracement? That new high is a level that I will label. Oop, wrong one. Okay, so I'll label this by marking it. And so what I'm waiting for is a confirmation of price to break above this second new high. Okay, if price breaks above that, then I have confirmation that my trade is potentially continuing, and the market's, for me, it tells me that the market's still bullish, and it gives me confirmation that we are still in the right market bias, and that we are still trading in the correct direction, and therefore it gives me confidence to stay in the trade. So price continues, and I wait for it to retest the previous high, the new high, and there we see that it breaks above the second higher high. So what I do next is that, now that we have the confirmation that the market is in fact moving higher, we can set a trailing stop. Okay, by moving our initial stop below the last swing low. Okay, so when the market made its initial high here, let's recap. It broke above that, triggered our entry point, created a new high, retraced, created a new support level, and retested the previous high, broke above that. That gave us confirmation that the market is potentially going to go higher. So based on that, I went ahead and moved my stop loss from this zone to this support area. Okay, So now we just repeat that process over and over for as high as we can go in the trade, and that's how you typically handle a breakout trade after the actual entry. So now we see another new high. Okay, so let's mark that area, and what we're looking for is another confirmation for a retest of that previous high, and we're hoping for price to break above that, and that will allow us to continue moving our trailing stop to protect our profits. So here we see another breakout. So next thing we do is we move our trailing stop to the next support level. Okay. Whenever we have another confirmation of breakout, and there are two levels of support here, I move it to the lower of the two support points. So anyway, continuing this this example, we see that price, we see another a newer high. So we move and mark that point, and now we wait for another confirmation of breakout. And here we see one more. So we mark that point. Okay, and also we move our stop loss up one more notch at the next support level. And then we continue and we wait for another breakout, and this time price doesn't retest the previous high. It fails on that, and it goes all the way down and stops us out. Okay, so potentially whenever you trade breakouts, that is what that would be a typical trade for you. In fact, this was a good trade. So in this example, basically our entry was here, right? So the distance between this entry and where we got stopped out is our actual profit that we made on this particular trade. So anyway, that is the concept of breakout trading. That's how you manage a breakout trade. You saw the examples of how I use my stop loss, and I use the confirmation points of the breakouts of the higher highs to give me a signal of when to trail my stops. So anyway, I hope that you've learned something from this lesson and that you got something out of it. So if you have any questions, or if you're not clear on any of the concepts that I've shown you today, you can always write me at support@forextweak.com, and you can visit us at www.forextweak.com. This is Wayne Voss. Thanks for joining me in Lesson 1 of Breakout Trading. I hope you join me for our next video, and on our next video we'll go ahead and cover the same concepts, except that we'll use a real price chart. So thanks again, and hope to see you soon.